Wednesday, we are covering the FOMC report, Jerome Powell. Very, very important event. It's why the markets are rallying a little bit now, because we're expecting volatility, as we always get, the moment Jerome Powell speaks. Join us for that live. I'm going to give you now the prediction that I have. I was right last time and the time before. Not the one before that, though. But the last two I was, and I'm standing by it, and I'm going to give you my prediction and where I see our favorite stocks going on that day, and where I see the Fed rate going into the spring and the summer of next year. So my portfolio is looking green, very nicely indeed. We're getting some real returns on our investments. Coca-Cola particularly doing well. Virgin Galactic coming up now, and others. We've seen the bottom with Enphase Energy. But this video is all about the FOMC report. And please, if you watch to the end of this video, there's a very important, an emotional video. If you want to see the link for the tribute that I did for Matthew Perry, Chandler Bing from Friends, stick to the end and you'll see that. Anyway, getting back to the Fed report. We're running at 5.5 right now, one of the highest rates in history, of course, and up for a very long time. And we're doing the inflation's under control. It's peaked. It's coming down. Overall, things are still getting more expensive, but the rate they're getting more expensive has peaked and slowed down. Has the Fed done enough? Well, some people think the rates need to go up again. If they do, it's 99% certain it's the last one. So if it does have to go up again, at least we know the next will be a rate a rate drop. However, are we going to get a pause? I think we should have a pause. I would love to see, of course, the rates come down. I'm in margin and would love to see the rates come down. But I do think that would be slightly ahead of the game. It's going to come down in the spring, but let's look at the information. All right. The Fed kept the target rate, which is what I said. They paused it at a 22-year high of between 5.25 and 5.5 in its September 23. We're running at 5.5 right now. The Fed is proceeding carefully, and policymakers will make decisions about the extent of the additional policy firming and how long policy will remain restrictive based on the totality of the incoming data. The evolving outlook and the balance of risks, Fed Chair Powell said at the Economic Club of New York. Fed Chair added that the tight policy is putting downward pressure on economic activity and inflation, which is good. However, what he doesn't want to do is a Volcker and bring things down and then suddenly the rates go up. We know that Jerome Powell, as human as it is, everybody wants to leave a legacy and everybody wants to, be known for the guy who did something good. I understand that, but he doesn't want to make the mistake of what Paul Volcker did. However, he might be going too far. A lot of people think he's gone too far. I think a rate pause is all that's needed and then come down in the spring. Anyway, we shall see. Fed Chair added that tight policy is putting downward pressure on the economic activity and inflation. However, additional evidence of persistently above trend growth or that tightness in the labour market is no longer easing. Could put further progress on inflation at risk and could warrant further tightening of monetary policy. Powell also noted that inflation is still too high and that a sustainable return to 2% inflation goal is likely to require a period of below-trend growth and some further softening in labour market conditions. Remember, very, very important to note, Jerome Powell is not trying to destroy the economy. He's not trying to put everybody out of work. He wants the economy to slow down. It's a very, very different thing. In the United States, we have a very strong economy, and many people can remain in work and be able to do okay. However, we need to see prices come down. That's what it's all about. Prices coming down, because if the market cools and people aren't spending, they lower prices. If everyone's spending and going crazy, they're paying more to employ people and so on and so forth. That's where the rates go up. That's where inflation goes up, and that's the problem that you have now. The number one thing is to control inflation. Anyway, let's look at the forecast and see what people are thinking. Go back to this report here a second. The benchmark interest rate in the United States was last recorded at 5.5. Interest rates in the United States is expecting to be 5.75 by the end of this quarter. Okay, according to Trading Economics global macro models and analyst expectations, in the long term, the United States Fed funds rate is projected to trend around 5.25 in 2004 and 4% in 2025. So you see it will start coming down next year. I think we'll get our first rate cut in the spring into the summer. That's when I think we're going to get our first rate cut. I think all we need is a pause. I cannot see any way whatsoever that we're going to get a drop on the rate. That would be great. I'd love it, but I don't think it's the right thing. It's the right thing for me, perhaps personally, but not the right thing for the overall market, which means it's not right for me either. Anyway, what do you think? Don't forget, you can join us for the FOMC rate. It will affect all our stocks. We are watching it now. Click above my head for the FOMC report. And that is on Wednesday, above my head. I did say to you as well, if you watch to the end, click above my head. It will take you to that tribute for Matthew Perry I did for Chandler Bing. I watched all the Friends, and it's a really sad occasion to lose a man my age, 54 years of age, and we don't know why yet. Anyway, click over here and you'll find that video and also the FOMC report. You can click right there and join us live for the whole event. As always, until next time, take care of yourselves and each other.